Thanks for joining us on Power Lunch. This is Bloomberg Quint. I'm Harsha Subramaniam. The headlines at this hour. Enforcement Directorate conducts seize and search operations across 12 locations in Mumbai a day after the Punjab National Bank says 11,000 crore fraud took place at a Mumbai branch. Jewellery stocks drop amid fears that the investigation in the PNB fraud might spread to other jewellers. Z-Learn will acquire more than 40% stake in MT Educare for 200 crore, triggering the open offer clause. Wholesale prices rose at a slower pace in January, with food articles falling 2.4% last month. All right, quick check on how the markets have been faring today. Neeraj is here with a closer look as always. It's been benchmark indices have been relatively steady, but the mid-caps is where there's some underperformance.
Yeah, but I mean, one, you can't complain because of the amazing outperformance in the last 4 or 5 sessions that the mid caps and the small caps have had. But just pull up all the key indices once for the benefit of our viewers. One is, of course, the indices. And I think post the WPI numbers, the Sensex, the Nifty Bank, and thereby the other benchmark indices also went up further. But just bring up the mid cap and the small cap indices once. And look at that. I mean, just the fact that because of the last few days of outperformance in a meaningful way, this is just taking a bit of a breather. Keep in mind the Nifty Bank would be very active today also by virtue of the fact that it's the weekly FNO expiry, so the volumes will pick up substantially. Don't get surprised if the NSE FNO volumes that you see at the end of the day or even midway through trade look substantially higher. That's just the nature of the beast currently. Already 7.5 lakh. The cash market volumes may not move up so much, but the NSE FNO volumes will move up substantially. One last piece on the VIX before we move to stocks. India VIX has come off dramatically. Harsha, you'd remember we were looking at levels northwards of 21 about 6 days ago, 7 days ago. From those peak, it's now at 15.9. So there's a substantial cool off in India VIX, as also in CBO VIX, to be honest. Now, banks are leading the charge. I don't really need to spend too much time out there on the index. What's doing well? Essentially, the Nifty Bank and the Nifty Bank components, save for Punjab National Bank, which I'm sure the show will talk a lot about in detail. Except for PNB, almost all the other banks are relatively stable. Let me put it that way. Axis Bank had some issues, but that too bounced back after that announcement, the clarification that Axis Bank gave out, and Axis Bank to move back into the green. The other banks seem to be doing okay. But the broader end of the spectrum, not too bad. Two trends. One, I think Harsha is right. Some of the jewelry stocks have come off, save for Renaissance Jewelry, which is seeing a bit of a renaissance in its stock price, to be honest, up about 12 or 13%. So that stock is doing okay. And then the cement names, guys. I don't know if there is some murmurs of price hike also came about. We'll try and verify it for dealers. But look at Shree Cement, look at Ramco Cement, the mid cap, small cap end of the cement space. Though Shree is a large cap, but the cement players seem to be having a really good day in trade today. Let's wait and watch what happens there.
Okay, but all the action is really on PNB. Neeraj gave you that stock price. Well, it's been weak, justifiably. So here's the story. The Mumbai Enforcement Directorate has got cracking. A day after the 11,000 crore fraud at Punjab National Bank came to light, the investigative agency is conducting search and seizure operations across 12 locations in Mumbai, which includes the residences of all the accused and Nirav Modi's offices. Gitanjali Gems' office is also being searched, we are told, for evidence. This comes at a time when Nirav Modi, who's not in the country right now, has written to various bank officials seeking more time to repay his dues. What's keeping bankers on tenterhooks, though, is who's going to honor the line of credit extended on the basis of the LOUs, or the letters of understanding, issued by Punjab National Bank. Vishwanath Nair joins us with some of what these bankers have to say about honoring these letters of credit. Where does this go from here? For those guys who've actually sort of stuck their neck out, who's going to pay them back?
Well, so essentially how a LOU works is that domestic bank issues it, foreign bank gives out credit on the basis of that LOU. It's essentially a commitment saying that I'm going to pay in the event that this borrower does not pay you back in time. So just by looking at the sanctity of that contract, PNB would be liable to pay this the entire amount to whoever these bankers are. Number of bankers in the system have told us that this 11,000 crore number is actually the outstanding and not the amount of money that has been transacted over the years. So it's a large chunk of money that needs to be repaid on an immediate basis. Now, of course, there is also this letter that Nirav Modi has sent on Wednesday claiming that he will pay them back. He's trying to sell a Firestar Diamond, which is his flagship brand of jewelry. He's going to sell that and pay about 6,500 crore to the lenders. this is still a claim that the lenders are looking at. They're looking at the letter, they're thinking, what next to do, because more often than not, typically whenever there's a default or wherever there's such a big huss about what has happened, the borrower ends up not paying, or there is always some kind of problem that it ends up
Haven't we
creating.
seen that for a while?
For a very long time, indeed. So something like this happened within some time. It's a similar case, where the promoter just he vanished, he was in another country, and just the case is still hanging.
Okay.
So, this is something that we've been seeing. So bankers, other than PNB, are saying PNB is liable to pay because this is the contract. And PNB on its part is saying that, this is a disputed transaction. We will verify which of these contracts are legitimate, genuine, and what are we legally required to pay, and then we'll pay that amount back.
Okay. Hold that thought for a moment, Vishwanath. H.R. Khan, former Deputy Governor of the Reserve Bank of India, now joins us. Mr. Khan, thank you so much for joining us on Bloomberg Quint. Firstly, it's a scam or a fraud of an enormous magnitude. What have you made of this, and what do you think are the ramifications now that this has come to light?
As I was telling to some other channel, this is an issue of risk management, people management in banks. And as we understand that SWIFT system was not integrated with CBS, and possibly, I don't know the full detail, the people at the back office probably could not have looked at very carefully. Third is the whole idea of maker-checker concept in issuing SWIFT messages and reconciling them possibly was not foolproof. So they all contributed to this. So that's why there is a need to look at our systems and controls very, very closely. So this is the part. And so, but the ramification is concerned, I am not so much, of course the amount looks quite staggering, but one also has to keep in mind what could be the implication for the standing and credibility of Indian banks in overseas centers in terms of acceptability of our letters of credit and guarantees. This buyer's credit business in the past, some of the overseas regulators have asked Indian banks, how safe are these buyer's credit? And we have taken a stand that it is a safe and sound business, there are no issues. Now that such things come, then that puts doubt about the credibility of the Indian banking system. It may not so happen that tomorrow some centers, our LCs are not accepted, guarantees are not accepted, and the whole buyer's credit business also gets affected. I think that implication we have to keep in mind. That is something. That's why both government, regulators and banks, they have to put their heads together and come out with some statement of intent that this has happened, we are cleaning up, then there is nothing serious to happen, and we are fixing the things. I think that sort of an assurance is very important. Of course, investigation, enforcement action has to follow, given what has happened.
Right. Mr. Khan, this is Vishwanath Nair joining in. What happens, and this is something that the sources are telling us at this point, is that there is no RBI guideline which clearly states that the CBS and the SWIFT network need to talk to each other and that there has to be this reconciling of transactions. Firstly, is that true? And secondly, are banks then free to do this, to have systems that do not talk to each other?
I don't know which guideline you have been talked about, but RBI cannot go and tell every little detail about your systems and controls. If SWIFT messages are being sent and some people is authorized to send some message, should you not put a control system in place that the maker-checker system is there and it is captured and back office sees what are the transactions are happening and it is accounted for? It's a common sense approach, and control has to be put. There cannot be guideline for everything banks put into transaction. The transaction monitoring has to be a major part of our control system, and you have to use some analytics to see the pattern. If there are unusual pattern of large debit, large credits are happening, there has to be something. What are these credits? What are the debits? So the focus has been that any outstanding is there in nostro. But if large credits come, then large debit goes. Somebody has to see why this is happening.
Okay. Sir, PNB in a letter, in a caution notice to other banks also points out that the LOU for import has been kept open for a year when RBI clearly stipulates that it has to be, it's only for a 90-day period. Was there a clear violation of norms on that aspect at least?
No, the one has to see whether this 90 days is for the gems and jewelry and diamonds and all. So whether it is only for gems and jewelry or there are some other imports have happened where these 90 days don't apply. So one has to see. The second part is whether the overseas branches should have seen that this LOA has been issued, assuming that they have been issued in contravention of RBI guidelines, whether they have been issued and whether they have relied on the issuing bank. So whose responsibility? I think that has to be legally examined. So it is not a cut and dry case that you can say that this party is 100% responsible. So we have to see the fact and see that liability, what could be the apportioning of liability. You can't just come to an immediate conclusion that
Mr. Khan, there's also this whole argument of who's exactly liable here, whether it's the Punjab National Bank or banks that did not do their due diligence whenever approving these contracts. So the debate there essentially is that Punjab National Bank says you violated some of these norms, some of these requirements, while the banks say that a SWIFT message is essentially a contract. What would you say here? Because
no, as I said, it has to be very legally examined. One is bank gives a guarantee, so that guarantee is bank has to stand by that guarantee. But then there are if there are frauds, courts have gone in a different direction and say there are frauds and collusion between the issuing bank and overseas bank has been apparently negligent. There are some issues, finer aspects of regulation and legal setup, so that has to be examined. But prima facie, of course, the responsibility lies the fellow who has issued the guarantee. But then, as I mentioned, we have to see the finer aspects, whether there is some collusion overseas. And so, no, the whole idea is this buyer's credit was going on this basis that it's a safe and sound business. So that has come into question. So my worry is in future, what is going to happen to this buyer's credit business? Yeah. Where you get funds from overseas based on the understanding that this is a very safe and sound business. Okay. That is being put to question.
Mr. Khan, I have one more question, and as we speak, the Bank Nifty is actually sort of taking it on the chin, and you are seeing the Nifty sort of slide down as well. This is not good news for most of the banking stocks. Mr. Khan, the question is, not so long ago we did see a fairly serious interbank reconciliation scam play out before us. And now we are seeing, another kind of fraud being committed right in one of the fairly large public sector banks. Where does this leave the Reserve Bank of India and the kind of checks and balances it has put in place? Is there a clear lacuna in what the RBI is doing, or at least in terms of the norms that the banks are supposed to follow? Where do you think is the lacuna?
I think elaborate directions and instructions have been issued in terms of fraud monitoring. There is one central fraud registry. Banks have access to that to know modus operandi what happens. Then there is an alert system, red flag system. Then there is a provision for special committee of the board which should look at the frauds and whether the systemic lacunas are there. So the process and procedure are laid down. But sometimes you only believe in ticking the boxes. Going beyond that is very, very important. I think time has come. We have to holistically look at the entire risk management framework, operation risk management framework of banks, because more and more we move towards IT dependency systems. So these control aspects in a holistic manner has to be examined. So one can say that public sector banks may be a little behind, but I will not be surprised there are gaps in many non-public sector banks also. I think there is a need on a war footing, looking at the risk management and control system from the operation risk management point of view in all banks.
Sure. So
I think banks themselves, IBA, RBI, and government may have to take very proactive steps.
Sir, I don't want to sound alarmist, but the headline number seems extremely large. What is the fallout? Is there a systemic risk here?
No, as I told you, one is that banks are struggling with NPAs and they have to provide for that, and the new guidelines which has come probably will accelerate the provisioning requirements. There are issues from the treasury point of view, treasury profit loss point of view, being the yields hardening, so there are issues. And over and above that, we have this sort of loss arising out of fraudulent transactions. So it is triple whammy for the banks. But then things have happened. We have to rectify and move ahead. So the whole idea is to draw lessons and set right things. It's not that we just get stuck with this thing and we can't raise our hand. We have to move ahead. But as I mentioned, I think there is a serious case to look at the operation risk management system in banks.
Mr. Khan, we leave it there. Thank you so much indeed for joining us with your views. That's the former Deputy Governor of the Reserve Bank of India talking about a need to review the risk management systems and clear lacuna in norms as far as fraud detection is concerned. Take a look at how the stocks have been reacting through the last 20 minutes. The Bank Nifty has taken it on the chin. PNB, of course, has been down since morning at about 7.5%. The Nifty Bank in the last marginal recovery, but you've been a sharp slide in some of those banking names. Last word on the story, Vishwanath, any specific aspect that you want to focus on? What we've heard from PNB specifically on the caution notice sent to the other banks. Yeah. Have you heard from the other banks at all?
So the other banks, what they seem to suggest is that PNB is sort of deflecting. The caution notice, the main aspect of the caution notice is they are accusing or they are at least assuming that there is some form of connivance with the employees of other banks. Yeah. So that is a serious claim, serious allegation from PNB coming in, and the other banks are saying that this is just you trying to deflect. You're trying to say that I'm not liable to pay because some of my employees have connived with whoever these borrowers are. So this is something that will come. We'll know the truth behind this after the CBI investigation and after these RBI investigations, which are continuing at this point in time. But at this point in time, at what PNB is steady, it's steady in its statement saying that we are not fully liable to pay everything. Or the other side of this saying that PNB is the person who has to pay all of this money.
Okay, let's wait and watch how this plays. Let's get you some more voices on this one. Menaka and Ira spoke to Abhizar Divanji of ENY and former Executive Director at Bank of Baroda, R.K. Bakshi, to understand how a fraud of this size could have gone on for so long without anyone noticing. Listen.
Sir, I've always believed operational risks far outweigh credit risks in a bank, but the banks are more obsessed with credit risks. And I think a lot has been left open. It's like leaving your back door open while you are posting guards on the front door. Operational risk is a very important. This is an operational risk which has created a credit commitment on behalf of the bank for huge amounts. It doesn't surprise me because the way apparently the systems have been run, ultimately SWIFT messages, somebody inputs the message and there are clear formats. There are 103 and 700 series and all. They are meant for specific type of messaging. Some are secured messages, some are unsecured messages. Now, naturally, a clerk will input the message there, but there has to be a base signed document, an order signed by the credit officer on the basis of which this should be input. But that nevertheless doesn't prevent from a recalcitrant or a dishonest employee from inputting that who has access to the SWIFT system. Another officer has to authorize. There are secured coded messages. Once gone out of the SWIFT message to another counterparty, it will become an obligation on the part of the bank to pay or to do certain things, which may be binding financial commitments. Having said that, so banks, SWIFT message access has to be controlled. Proper rotations have to be there. But what is more important is, in the present day setup, it should be linked to the CBS or the core banking system. So the transaction, ultimately SWIFT is nothing but a communication mechanism. Yeah. It's a messaging service which is secured and coded, and therefore it is accepted by the counterparty as binding on the originator. But if it is linked to, so within the bank, it should be linked to the core banking. The core banking should generate the LC, which should then get communicated through the SWIFT messaging. But SWIFT can naturally be used without linkage to the core banking, and that is what has been done in this case.
So it's not, just one question, Mr. Bakshi. It's not mandatory by the RBI that the SWIFT messaging be linked to core banking?
I don't think so. There is maybe any such thing, but by RBI, because RBI cannot perhaps go into all the nitty-gritties of things. But it is very commonsensical that SWIFT message, which has got such huge potential of communicating binding commitments on the behalf of the bank, should have proper control. Who is manning it? What are their credentials? What is the 4 eyes principle that is employed? What is the rotation that is done? But even more important than that, even when I worked overseas in Singapore and London, even when used to have telexes and we used to send tested messages by telex or by SWIFT, it was common practice by the branch manager or some other official to go through the carbon copy of all the messages that have gone through during the day and see whether and tick against them whether they are authorized. We check simple voucher of 5 rupee payment or 10 rupee being debited to the profit and loss of the bank. But we don't check the messages that have gone out of the SWIFT during
Mr.
the day.
Mr. Bakshi, if I may add to that, I think what we're also trying to understand is how could have this problem ballooned to the size of 11,000 crore without having attracting the attention of anybody else in the bank? I mean, it seems absurd that officials of these three companies go to that particular branch, ask for a continuation of the LOU process, and that branch, which has seen a change in employees because the previous employee retired, says, oh, but you have to, cough up a cash credit of 110%, and they say, oh, but we've been able to do these LOUs in the past without cash credit, and suddenly, wham, you have an 11,000 crore rupee problem. How could have 11,000 crore rupees missed an entire system?
Let us, if we keep aside the size. So, for example, it is like this. It is a combination of complicity on behalf of those two employees. It is a reason of lack of adequate systems on behalf of the bank. It is a lack of alertness on the part of many who might be doing nostro account reconciliations. So frauds happen whether there is complicity.
But 11,000 crores, Mr. Bakshi, I can still understand that, people may overlook a few hundred crores or a few crores if they're not reconciling. But 11,000 crores?
If it is not entering the system, you will not. Yeah, you are right. See, when the banks were paying and it was going to the nostro account of the bank, how come it was not reconciled? It was nostro account of the bank means it's not for the PNB's benefit. When people say it was going to nostro account of PNB, it must be going nostro account of PNB for credit to Nirav Modi's account. And therefore, Nirav Modi's accounts would have been credited and he would have made further payments wherever he wanted. So those large payments, if suppose I am so it's a lack of alertness, but there were the principal stoppage of the crime would have happened if the SWIFT messages, the simple practice of checking all the SWIFT messages through their copies which have gone during the day. It would have been nipped in the bud. Otherwise, it can raise any scale. In 1 year, if you are issuing one LOC of $5 million every second day or third day, it can balloon to that amount. See what happens. A credit-related fraud where a bank is giving loan, there's appraisal at various levels and sanction, and then it reflects in the balance sheet of the bank.
Right.
This is a non-fund credit which will appear in the bank's balance sheet through contra liability entries. A contingent liability entry has to be made. But because it was not linked to core banking and nobody will notice, it is like somebody stealing in the old times, demand draft book and issuing demand drafts which are not recorded in the bank book, but they would get caught when they're presented for payment.
Mr. Bakshi, I'm just going to interrupt you, Mr. Bakshi, because I want to pick up on that issue with Abizar as well on contingent liability. Abizar, in the last 24 hours only, there is now this battle between PNB versus all the other banks that may be exposed. I mean, we know a couple of names which were named in the original document, but we don't know the full list. They are saying, look, this is PNB's contingent liability. They have to make good to us. PNB is saying we don't know what our liability is because it is a contingent liability. Who is the eventual party responsible, Abizar, in terms of making the payment?
I agree. So ultimately, if, as Mr. Bakshi said, that if there is a SWIFT tested coded message which has been received, then the counterparty bank frankly has done its level of diligence effectively, because that's what the practice is. If it is proven that there was a lack of control in reconciliation at PNB level, where it could not reconcile its SWIFT messages with the core banking system, which by the way now is automated, completely. If they were not able to do that and not record it, then it clearly will be a PNB liability effectively. If it is, so normally such transactions also have confirmations, by the way. So while there is a SWIFT confirmation, sometimes you also get counterparty confirmations again from the banks. It's not just that it's as impersonal as issuing a SWIFT message sometimes. And if the amounts balloon, and I think maybe that's the reason why it got caught. It started with 280 crores. So ultimately the contingent liability is a liability guaranteed by PNB by issuance of an LOU. And of course, we haven't seen the wordings of the LOU, but I'm sure if it's a normal transaction, then it would have the credit risk would lie with PNB. And ultimately the claims would realize. But one will have to see the facts. One doesn't know how it has happened, how it's been received at the other end, but I don't want to sit on the fence. I'm saying that in a normal transaction, it would be a PNB liability.
Okay. And
see, now it's all automated. My whole question is that
No, go on, sorry.
Go ahead.
Go on, go on.
No, I was just saying that what Mr. Bakshi was talking about earlier was a system that we had, which I think was more robust than the current robotic system of automated reconciliations. I think that system actually verified everything. Now it is very much automated, and the core banking system talking to SWIFT is a very natural thing. Now we've had many things. So for example, you're saying that PNB may not have done it. It could have been that there had been a malware software in that which would have prevented these transactions. So recently for another public sector bank this had happened, where transfers were happening in an unauthorized manner and the bank did not know, and suddenly the bank picked it up, and luckily the bank, the credit had not happened at the other end in the nostro, so they could catch it. But I'm saying that, and this happened with a government sector bank. So I'm just saying that one has to see that whether this is just two officers colliding and doing something. Is it a malware software where we couldn't pick up? And I rightly agree with Mr. Bakshi. There are hundreds of these transactions going through every day. And unless the reconciliation picks up, or unless somebody raises a claim, it'll be impossible to investigate. Now, Menka was asking how does this problem balloon to a 11,000 crore problem. Look at it. It started with 280 crores being identified, and then we searched into it and figured out that the amount was much bigger. What should happen many times, the vigilance that is required is that a nostro account should be looked at. I know it's to credit Nirav Modi, so what will happen is the amount would come in the nostro and the next minute it will go out. So it's difficult to catch on an intraday reconciliation on that. But somebody would look at the transactions and figure out that there is something which is happening which we don't know. So I think a lot of it is vigil. A lot of it now is automated in terms of picking up transactions of an unusual nature and trying to reconcile them back with the books. I think it's the reconciliation which is kind of broken down more than anything else.
Abhijit, Divanji, different voices there on the PNB fraud and the outcome of it. Let's put a break on that note. Coming up next, the Singapore Stock Exchange promises nifty options for another 18 months. We'll tell you more about that on the other side. Back on Power Lunch, the headlines at this hour. Sensex Nifty sees steady gains on the back of strong cues from Wall Street after US inflation figures come in higher. Mid-caps underperformed the index, trading flat. Shares of MT Educare surge after it enters into a definitive agreement with Z-Learn for preferential allotment worth 200 crore. The Singapore Stock Exchange assures clients that it's going to offer NSE options for at least another 18 months. Wholesale prices rose at a slower pace in January, food articles falling 2.4% last month. Quick check on the markets. The benchmark indices are relatively steady, but it's the mid-caps that are relatively weak. But the action in the last 20 minutes has also been on the Bank Nifty that's been sliding considerably. Agam is taking a closer look at what's going on. Agam?
Right, Harsha, as you put it, we are looking at both benchmark indices advancing by 0.7%. And, well, this is amid relatively average turnovers, at least in the cash market. On the other hand, at 130, the F&O turnovers have picked up quite substantially at little over 9 lakh crore rupees. That said, in terms of the broader markets, we have seen them, underperform the benchmark. So we have seen both the mid-cap as well as small cap indices trading marginally in the red, largely flattish. In fact, now the Nifty mid-100 free cap has declined by as much as 0.5%. Now, in terms of the sectoral indices too, it is the metal index which is gaining and is outperforming the rest of its peers. PSU banking, on the other hand, is looking at substantial weakness. And in terms of top gainers, we are looking at good traction in Hindalco, Vedanta, which is leading the metal index higher, and ICICI Bank. On the losing end, we continue to see Indiabulls Housing Finance, move further downwards. So some weakness seeping in there. But on the whole, largely steady, at least when it comes to the benchmark indices, Harsha.
Okay, Agam, thank you for that. We'll keep a close eye on how banking stocks are performing, particularly PNB, that's been at the eye of a storm. But let's talk about another tussle that's going on. This is between the Indian bourses and their foreign peers. The Singapore Stock Exchange is said to have told its clients that they can continue trading on nifty option contracts for at least a period of another 18 months. Now remember, this comes after the NSE had said that it's going to discontinue sharing data from the end of July. Sajid has been tracking that story. Sajid, so where does this go from here? This is Singapore Exchange or SGX trying to broker piece?
It's not a broker piece here, but it's trying to allay fears of some of the clients, because what's going to happen is that NSE has already given them a termination notice, which is there, and that gives them a 6 months period. So a minimum of 6 months there is going to be trading on SGX Nifty. Now, the current agreement that we understand from our sources says that if there is any outstanding contract which is there for month beyond August, when the termination happens, NSE will support the contracts with settlement price. What does it mean? It means that any outstanding contracts which are there, and if you look at the Bloomberg terminal, you'll see that there are contracts open till March 2019 already. The agreement between NSE and SGX allows them to have 2 nearest month contracts and quarterly contracts. So March would be there, the June will be there, October will be there, and then December would be there. That's how the contracts are generated. And before the termination happens, there is a likelihood that June 2019 contracts will also be issued. That means that anyone who's trading on the SGX can trade on this contracts till at least March 19 and maybe June 19. That's a nearly 12 to 18 month period window which is available, and this is what SGX is communicating to all its clients, that you're not going to see the pipe being cut in August. It will be there for 12 to 18 months, and in that period we are working with NSE to have a connect with them. And this is something which Bloomberg also reported in today's story, that SGX and NSE are looking at a connect. This connect would be similar to a Hong Kong Shanghai connect which is there, but Hong Kong Shanghai is for stocks and we are talking about derivatives here. So there's a lot of negotiations which are going on, not only from exchange level, regulator level, but government level as well, for that to happen. But that's a different story. But the point is that if you're looking at SGX Nifty getting over on August, it's not going to happen. It's going to go on till March 19th or maybe June 19th, and that's what is been communicated clearly to the clients.
Clients who already using the platform have some breathing time for at least till for the next 18 months. Okay, Saji, thank you for that. Let's move on. We've come to the end of third quarter earnings. Did India Inc. show green shoots for the much-awaited recovery, or is there a longer road for a meaningful pickup? Darshan is standing by with the scorecard of the third quarter. All but Ambuja have come out with their quarterly numbers. So, could you sort of sum up the performance of how this quarter was, Darshan?
Yeah, so one is left, but we'll get a fair indication of how the performance has been. So this is what we've seen as far as the earnings is concerned. So almost half of them have come out with an inline set of numbers. 12 of them are strong and 13 are weak. In fact, it will be 24 which have come out with numbers. Ambuja is still left. But the scene does give an indication, the fact that the performance over the past few quarters, the outperformance is clearly missing for the Nifty companies. Now, if you take a look at what's happened over the past few quarters, the number of companies reporting strong numbers has come down drastically to just 12. At one point of time, it was almost 25 companies reporting strong numbers. You can see almost 23 companies reported strong numbers in the fourth quarter, which came down to 13, 16, and now just 12. And the number, look at the companies which came out with numbers which were in line, so 15 to 18 to 24 to 24, but we still don't know what's happened with Ambuja, so it could go either way. So that's the trend that we are getting it. But the general trend is that it is a quarter which is extremely weak. Now, if you're looking at the general trend, what is happening? Majority of them are yellow, which means inline set of numbers. Ambuja has yet to report numbers, so we have put that out. But the green ones are the strong numbers. The yellow one, basically the IT companies, the banks, the FMCG companies reported inline set of numbers, and the pharma companies, some of the banks, some of the two-wheelers came out with numbers which were on the lower side. Now, if you're looking at the trends, what has happened, let's take a look at the big momentum gainer. So Coal India, after 3 weak quarters, has come out with a strong set of numbers. Bharti Infratel, after 3 weak quarters, has come out with a strong set of numbers. Bosch and HPCL, after 2 weak quarters, have come out with a strong number. So that's the trend for the third quarter. If you're looking on the flip side, which have put a poor show, Ultratech, after 3 strong quarters, has come out with a weak quarter. ICICI Bank has come out with a weak quarter after 3 inline set of quarters, and SBI and Airtel had had decent quarters, but they have managed to disappoint this time around. So this is the general scene that we are seeing.
Are you able to break this down sectorally and tell us what's worked, which sectors work better than the others?
Yes, absolutely. So agri, you have UPL, which is the only company in the agri, came out with a disappointing set of numbers because of volatile weather in Latin America and pricing pressure. It was down almost 8% post the numbers. Auto is a mixed bag, no strong numbers. Only the strong number was the Auto Inc. number, that was Bosch. That was a strong number. And the weakest was Bajaj Auto in the two-wheelers and Tata Motors in the four-wheelers. JLR really disappointing as far as Tata Motors is concerned. Now, the other pack that you want to watch is cement. Ultratech is come out with a weak set of numbers. Higher input cost hits the operational performance. Ambuja is yet to report the numbers here. As far as L&T is concerned, numbers were good, order inflow was good, commentary was good, stock at a 52-week high. The next parameter is the FMCG. All the numbers were in line, but volume growth was strong was HUL and Asian Paints, and it was weak for ITC, but nevertheless ITC numbers were in line with estimates. Oil and gas, a mixed bag. ONGC, among the upstream companies, ONGC was a weak number given the fact that there was higher operating cost. Reliance was because of a positive Geo number and petrochemicals that aided, but refining was subdued. And among the oil marketing companies, IOC and HPCL was strong, but BPCL, because of lower inventory and weak marketing gains, came out with a weak set of numbers. The other parameters are the financials. SBI and ICICI, weak numbers, weak asset quality. NBFCs, be it the HDFC, Indiabulls Housing, or Bajaj Finance, the NBFCs did extremely well in trade, all three strong numbers. IT, nothing much to talk about, inline set of numbers, met the guidance, nothing major. The mid-cap IT did better than the large-cap IT this time around. And metals, Tata Steel, strong domestic performance. Coal India, you saw after 3 quarters of weak performance, higher e-auction prices and volumes were extremely positive. The other factor is the pharma base. Low base was there last time around, but Lupin was a big disappointment, and Sun Pharma, because of Taro numbers and a one-off tax, was disappointing. So overall, if you're looking at it, it does not seem that the earnings revive. The quarters and quarters of earnings outperformance is clearly gone, and it's basically an inline set of numbers that we are seeing this time around.
Darshan, thank you for bringing that in perspective. Let's talk about one more sector that's really not represented on the Nifty, but it's a sector that's been fast gaining significance, the aviation space. 3 listed players, Indigo and SpiceJet, managed to deliver a strong quarter, but the same can't be said about Jet Airways. So Amit is here to tell us some of the key takeaways of how the aviation sector performed in this earnings season. Sumit.
So I'll start off with the revenue per available seat kilometer for the airline companies. Now this has increased for all the airline companies, and the highest growth has come in from Indigo. Indigo's revenue per available seat kilometer compared to the last quarter has increased 10%, while that of SpiceJet has increased 9%. And when you see of Jet Airways, it has remained subdued but has increased to by 1.4%. Now this growth is mainly on the back of passenger growth and because of higher average fare. Now speaking of average fare, now the average fare earned by the airline companies in the third quarter has increased for Indigo and SpiceJet. Now Indigo's average fare compared to the last year has increased by 7%, while that of SpiceJet has increased by 9%. Now Jet Airways average fare declined by 1.5%. This is mainly because of a weak international business of Jet Airways. That's the reason we have seen this decline in the average fare for Jet Group. Now if you see on the cost side, the cost per available seat kilometer for all the 3 listed airline companies has increased compared to the last year. Now this is mainly because of higher aviation turbine fuel prices. Now aviation turbine fuel prices on an average in the third quarter have increased by around 13% compared to the last year. So you can see an increase in their cost per available seat kilometer. Indigo's has gone up by 4%, Jet Group by 2.6%, and that of SpiceJet by 8%. Now if you remove this fuel cost and check the other cost, then that parameter, Jet has outperformed. Now Jet's cost per available seat kilometer excluding fuel cost has declined by 2.6%, and you can see it has declined consistently, and this is the 5th consecutive month where we have seen a decline in the total cost, while that of Indigo and SpiceJet, if you see, it is increased by 2% and 4%. Lastly, the core profit, that is revenue minus cost per available seat kilometer. Now this has improved for all the 3 listed airline companies, but for Jet Airways it has still remained negative. For Indigo, if you see, it has come up from 0.4 in the last quarter, that's 0.4 rupees, to 0.7 rupees in this quarter. For SpiceJet, it has increased from 0.3 rupees to 0.5 rupees, and for Jet Airways, it has improved from negative 0.07 to 0.05 in the third quarter of financial year 2018.
How would you say these guys have performed from a market share standpoint at the end of the quarter?
So if you see on the market share front, the smaller players like Go Air, Air Vistara have taken up some market share from Indigo. Now Indigo's market share has reduced from 41.6% last year to 39.5% for the December ended quarter, while that of smaller players like Go Air, it has increased from 8.1 to 9.1, and for other players like Air Asia, Vistara, it has increased from 6.8 to 8.2. Whereas the market share for players like Jet, Air India and SpiceJet, it has remained constant at 17.2, 13.2 and 12.8% for the December ended quarter.
That's aviation for you, Samit. Thank you for that. Let's move on and talk about some M&A action. Zlearn plans to acquire nearly 45% stake in MT Educare. The SL Group company will also make an open offer mandated by SEBI. Yatin is standing by to tell us a little more details. What's the game plan here for Yatin?
Thanks for that, Harsha. Of course, Zee has been looking to consolidate its position in the education sector. In fact, this MT Educare acquisition will probably take them to secondary and higher secondary education platforms from which they will be able to complete the overall chain as far as the primary and secondary education is concerned. Of course, if you look at the deal contours, we have MT Educare, which will be raising close to 200 crores from Zlearn, and Zlearn will be subscribing to the preferential issue, which will be entailing a fundraise of close to 200 crores at a price of 62 rupees 57 paise per share. Of course, this will trigger the mandatory SEBI open offer, which will entail an open offer of 26% in terms of the equity size. Of course, without considering the open offer being successful, we have Zlearn, which holding post the transaction will be close to 44.5%. The existing promoter Mahesh Shetty's holding will drop from a level of 42% to a level of 23.7%, and the public shareholders also will get substantially diluted, and post the transaction shareholding will be close to 31.74%, which means that the promoter group, both Mahesh Shetty as well as Zlearn, will be holding close to 75% equity, and the balance will be with the public. Of course, we had the management of MT Educare joining us earlier in the day, and here is what they had to say as far as the entire transaction and the deal contours are concerned.
We have a debt in our company, so we are looking forward to probably making sure that we're a little light on that front. And same time, we are looking at one small acquisition opportunity. Our RoboMate, which is our technology initiative, is really doing well currently. It requires a huge amount of focus, and marketing would take it, do wonders to it. So we are looking forward to deploying funds in all these three areas. Growth in our company is something which we are witnessing because a huge amount of technology awareness has happened. Our Prime Minister Modi's dream is also to make digital India, and hence we are seeing it largely as a growth capital. So our focus is also on making sure that we deploy it for the generation next and level next that the company will be surely traveling to.
Okay, that's MT Educare. Let's move on now. Reliance Communication hasn't managed to convince all its bondholders. The Anil Ambani Group company held a meeting in London last week in a bid to try and get them to approve a restructuring which would free up some of its assets. Bloomberg News reports that the only commitment given by the bondholders is that they want to reach a consensual solution at this point. Focus now on the economy. The wholesale price inflation for month of January eases to 2.84% from 3.58% in December. An easing of food articles inflation helped the WPI, the wholesale price index, last month. Wholesale food inflation has come in at 1.65% as opposed to 2.91%, and food articles at 3% versus 4.72%. Core inflation, however, remained high at 3.5% as against 3.1% in December. Among other sector manufactured product prices rose 2.78%. Fuel and power rose just over 4%, and primary articles at 2.37%. The government also revised the WPI inflation in November higher to 4.02% from 3.93%. Okay, Warren Buffett is just about done with IBM. The billionaire's conglomerate Berkshire Hathaway has cut its stake in IBM by 94% during the December quarter. This essentially draws a rare blemish on Buffett's investment record. Bloomberg's Corey Johnson and Tom Giles report.
I just pulled up this thing on the IBM on my Bloomberg terminal. I want to show it to you and to our viewers, which it shows what happened to IBM stock while Buffett was building his position. So if you look over here on the left, you see Buffett increases his position. It's the green line. As the stocks around here, unlike many Warren Buffett holdings, the stock didn't go up while he held it. It went down.
It went the wrong way.
Yeah.
He held it during a really rough period in the IBM story. After Ginny Rometty took over from her predecessor, Palmisano, she really tried to right the ship. She changed some of the ways that they were doing things. The buyback slowed down. She really tried to invest in making this a provider of cloud computing services and getting away from the old IBM mainframes, services, hardware, etc. She's come a long way, but it happened very, very slowly. It's a big ship, and you don't turn a big ship overnight.
I think you're being too nice. I've never been accused of that, at least sitting in this chair. I looked at that holding when he took it and thought, this is a company who's... I was meeting with a CEO of an investment banking firm, an important investment banking firm. It was off the record meeting this morning, and we happened to talk about IBM. Right. And we all laughed around the table. I said, yeah. Shrinking revenues and rising earnings per share, who's going to fall for that? Warren Buffett fell for that?
Of all people. And this is a guy who for many years avoided technology, feeling like, I want to leave that to people who know more about it. He wanted, traditionally he invested in things that you understand, that I get. McDonald's, for example, is one of the notable investments.
But he also has owned American Express, and he's owned a lot of Wells Fargo. So he's been in all kinds of things.
Things that he understood and Berkshire Hathaway understood. Tech they avoided, although they've been changing that. Big holder of Apple lately. Right. So he's definitely changed his tune in that regard. And Charlie Munger told Bloomberg a while back, that aversion to technology might have been one of our biggest mistakes. And for some of these companies, they were absolutely right.
Last thing I'll say about IBM's profits in this time went from $16 billion a year to $6 billion a year. IBM was a worse company than it was when Buffett first got involved, even though his investment didn't do terribly.
But they're showing signs of life.
Fascinating. Berkshire Hathaway exiting IBM. Well, that's almost the time we have on the show. We're leaving the Nifty and the Sensex ship-shape nearly at about 0.6% up in the green. But before we go, China is celebrating the Lunar New Year, its biggest holiday. But these are some traditions that you've probably never heard of. Bloomberg caught up with the Michelin star chef Andrew Wong to understand the top Chinese New Year food superstitions. Take a look.
I'm Andrew Wong. I'm a chef at Restaurant Play Wong in London. And here are 5 Chinese food traditions that you may not know. Fish. So fish is a very traditional food which is eaten during Chinese New Year. The word for fish, which is yu, sounds like the word for abundance, which is yu. Noodles, normally we're referred to as longevity noodles, and it's extremely bad luck to have the noodles cut, as it's symbolic of a shortening of life. Dumplings, again another food that are eaten a lot during the celebrations of New Year. They're thought to resemble gold ingots, which obviously are a symbolization of wealth and prosperity. Seeds, traditionally more a symbol of a good harvest. However, nowadays it's more of a symbol of fertility and bringing in an extension into your family. Mandarins, the word for mandarin in Chinese sounds like the word for gold, which is a symbol of wealth and prosperity. So, Happy New Year to everyone, or in China as we say Gong Hei Fat Joy.